24th of August. Here's David Shapiro, though, first up. The stock market continues to make you proud and make me worried because the bull on your side of the fence and the bear
strong.
this side of the fence. I guess us bears are getting a bit of a hiding at the moment.
I think so. It's time to cover up. Cover in.
Cover the shorts. Oh, boy.
Alec, it's very strong, and I think that it's inspired by the weekend events, the meeting of central bankers in Jackson Hole in Wyoming. And I think the message that came out of there was quite interesting. We know that we're seeing the end of the global recession, but I think the message was that interest rates will remain low and are likely to remain low for a long time. Now,
so to hell with inflation.
Well,
to hell with budget deficits.
In fact, that's exactly. They came out with a message. The view was that even by keeping interest rates low, it's not going to affect inflation. It won't be inflationary for at least 2 years. So your mate Rubini came out and is expecting the double dip recession.
And my mate Warren Buffett came out and said, well, inflation's going to go so crazily out of control that we could have a banana republic in the United States.
But not for a couple of years, though.
Of course, my mate Warren Buffett is again being ignored by the bulls. This is David's day.
You can hear the bears are hurting.
The bears are sore. The bears have got sore heads. But remember, Dave, Dow theory still says you can go another 1,000 points on the JSE before us bears will start admitting that it's back in a bull market.
No, I think what will worry investors, and we saw it the previous Friday and last Monday, was that eventually you're going to have to measure results against share prices, and they will start to look stretched. So until we get real evidence that the global economy is turning and there's real demand, I think you're going to have a very bumpy ride along the way.
Do you truly believe that this global economy is going to turn around and there is going to be strong growth?
There's very small evidence of it. It's you're starting to see, but the evidence that we're getting is mainly driven by this, like the cash for clunkers. We get a huge credit from the government to
American government.
Yeah,
so the American government's pumping a lot of money in. That is stimulating the economy in the short term.
That's right. The worry is what happens when all the tax credits, when all these schemes or stimulus packages run out. Will there be anything behind it? Because China alone can't help the world economy, and these stimulus packages alone can't help, or these kind of schemes. So I think behind that, consumers have to start spending again. So that's going to be the big worry. But in the meantime, we're enjoying very strong markets, and we're up at the highest level in over a year.
Pays your money, you takes your choice. If you bought one-time shares,
no, don't look there.
Don't you want to look there? One-time airline. Do you remember we spoke about this a while ago? They were the one airline that didn't hedge. And today we had a trading statement from One Time to say that their headline earnings are going to be between 22 and 26 cents for 6 months. So this is a company that you can get all your money back in 1 year on their profits. Yeah. Why shouldn't I look there?
No, it has been a massive turnaround there, but and they've done well. I mean, with petrol prices coming down, with the oil prices coming down,
well, they didn't hedge.
They didn't hedge.
They got lucky.
Well, I don't know what the right thing to do is where you are in a situation like they couldn't afford to hedge.
It's true, they couldn't afford the premium. SAA could afford to hedge because the government's behind it. Another $1 billion or so that they've lost on these hedging programs. But you've got to. They're smart operators. One time, maybe it is a share. If you can get your money back in 1 year, surely it's a share to consider.
Yeah, it's strange that they're going to make those earnings because if you listen to AXA's results, passenger numbers are down. So I suppose at the bottom end of the market, they must be doing well.
One time, the share price today reacting really nicely, up 34% on that earnings forecast, and they went from 52 cents yesterday to 70 cents. Not surprising, because in 6 months, you're going to make about 25 cents a share. That is one of the 8 blinkers on the JSE today.